Germany's biggest retailer also releasing its results today. Metro reporting a narrow loss for the first quarter as it cut costs. Investors, though, they're not too impressed because the shares are falling. As you can see at the bottom of your screen there, Metro trading lower by 2.4% right now. Well, the company's actually kept its full-year forecast, but it said that they depend on a continued global recovery. I want to get more on those figures now. Speak to the man in charge. Eckhard Cordes has been the CEO at Metro since 2007. Joins me live now from Düsseldorf. Thanks so much for speaking to us. Appreciate you taking the time. So, Metro is keeping its full-year forecast. Can you tell me how difficult it might be for you to meet that target?
Well, yes, indeed, we are keeping our forecast for 2011 because there is a simple reason that our sales came in flat in the first quarter that has to do with the shift of Easter. This year, Easter was 3 weeks later than last year, so we had no Easter impact in our turnover. So, insofar, a flat turnover in the first quarter is not in contradiction to a full year's forecast of a plus of 4%. So we are still confident that we can reach this target, both turnover-wise and profit-wise.
So tell me more about what exactly you expect to improve in the remainder of the year to meet the target.
Yeah, I mean, first of all, what we have already seen in the first quarter is that business in Eastern Europe, especially in Russia, has picked up. We are confident that this is going to prevail in the remainder of the year. China stroke Asia still going very strong in general and for us. And we also expect that we have a slightly positive business in Western Europe. So all in all, as I said, we are confident to reach a 10% EBIT increase this year and a 4% turnover increase.
So, Mr. Cordes, from what you're saying, positive in some areas, nevertheless, we've got some pretty serious macroeconomic risks now. You've spoken about them before: Japan, the Middle East, Europe's sovereign debt crisis for your business. Has the situation calmed down, or is it as risky as it was 6 weeks ago when you were really expressing concerns about these issues?
Yes, indeed. I expressed concern about these issues 6 weeks ago when we presented our 2010 results. Since then, let me put it that way, in our view, the situation has not worsened. Our risk assessment is basically the same, which we had come up with 6 weeks ago, and that explains why we also kept our guidance for 2011.
Talk to me about international expansion. Is the focus for the year still very much China, India, Brazil? Mr. Cordes, I will ask you that question again. Apologies if you're having any technical issues. If you can hear me, I was asking you about international expansion. You've already said that you want to focus on China, India, and Brazil this year in 2011.
Well, we have a clear focus to expand our business in Eastern Europe and in Asia. And in Asia, obviously, the focus regions are China, India, and in the years to come, as from 2012 onward, also Indonesia. For the time being, we are not an active player in Latin America.
Do you see any improvements at your operations in southeastern Europe, Greece, Romania, Hungary, and indeed southern Europe as well, Spain, Portugal, Italy?
Yeah, I mean, you mentioned some countries, especially Romania or Greece, also Portugal, and also Spain. I mean, the situation in these countries, due to the austerity measures in these countries, is still weighing on our business. Thanks God, we have come up with our SHAPE 2012 program, which has helped us to improve our overall cost situation, and which also led to margin improvements, i.e. productivity gains. So we are able to cope with the situation in these countries, but there is definitely no tailwind, or another one, still headwind.
You're able to cope with the situation, as you say now, but do you fear that if we do see a further deterioration as a result of higher interest rates here in Europe, or indeed further austerity measures, deeper cuts, that the impact of your cost-cutting program won't be able to outweigh the negative effects of the macro situation?
Well, I mean, we are confident in that respect that we indeed are able to outweigh any further potential negative impacts. As I said, our assessment in respect of the macroeconomic stroke political risks out there has not worsened since March. Our program, Shape 2012, is working well. So let me phrase it differently. We constantly reduce our dependency on macroeconomic tailwind.
Okay, great to talk to you. Thanks so much. Eckhard Cordes, CEO of Metro, world's fourth largest retailer. Thanks so much.